collapse where its currency gained in value. It just never happened. And it can't happen. People will talk about Japan. They'll say, well, look at Japan. Yeah, look at Japan. They got nothing in common with us. The only thing they have in common with us is their governments are making the same mistakes. But the underlying economies are night and day. The Japanese had a current account surplus, had a trade surplus, had a high savings rate. They're a creditor nation. We're a debtor nation. So you had deflation in Japan. You can't have it here. And the thing is, they really had an inflation in Japan. You just can't see it. Because prices would have fallen much more rapidly had the government not created all that money. And the Japanese economy would have been in better shape had they had a more substantial deflation, which would have enabled their economy to rebalance quicker. And they wouldn't have had all these problems. I mean, we're repeating all these mistakes in that we are not allowing the market to function. I mean, look, now we have General Motors and Chrysler are operating as government agencies at this point. Why didn't we let them go bankrupt? AIG is a government agency. Basically, all of the investment banks would have gone under had it not been for the government. And if you think about what I wrote in Crash Proof, think about what would have happened had the government done the right thing. What if the government didn't bail anybody out? We really would have had an economic crash. It would have happened. I mean, imagine if Goldman Sachs and Morgan Stanley also went bankrupt. Imagine if Wells Fargo and Bank of America went bankrupt. They would have. Imagine what would have happened if the FDIC went bankrupt and the Pension Guarantee Corp went bankrupt. They would have. Imagine where the stock market would be if we had real interest rates. So if the government had done the right thing, we would have had a complete economic collapse. The fact that the government came in with their stimulus means that collapse is still coming. It's just going to be bigger. It's just going to be worse. Right? People would have imagined, when I wrote this book, that none of this could happen. Well, it would have happened. We would have had a much more substantial downturn had the government not done all these bailouts. And a lot of people back then was, well, the government would never do that. How could the government do that? How could the government just, buy up all these banks? How could they, but they did it. They did it in a crisis. Nobody would have thought a few years ago that they could have pulled it off. But of course, in that crisis environment, they did it. And then what you have to ask ourselves is, well, since the crisis is going to get a whole lot worse, right? The reason that we were able to postpone the pain is the government, right? The government was bailing companies out, bailing people out, bailing consumers out. Well, what's going to happen when the government needs a bailout and there's no more money, right? Because when the Chinese and the Japanese are not buying our debt, then the government's ability to bail people out is finished. Then it needs a bailout. So what is the government going to do? I mean, what more draconian things, what more illegal things is the government going to do as the crisis gets worse? That's why, one of the things that I want to make sure people do is get their money out of U.S. dollars and U.S. assets as quickly as they can. Because I think they're gonna make it illegal, or they're gonna make it very expensive with exchange controls and high taxes on foreign currency transactions. They might actually make it illegal to move money into foreign assets. In a worst case scenario, they'll actually seize them. They'll actually take them away from us. I hope it doesn't come down to that, because I'm not really prepared for that. I have some money offshore. But most of my money is here in the United States. I have a lot of money in my Euro-Pacific brokerage account. It's not in U.S. assets, but it's in a U.S. domiciled institution. I think a lot of things would have to happen before the government seized assets that we already owned. But exchange controls, capital controls, that can be very quickly. Because if the dollar is collapsing and the politicians say, well, we have to stop the run on the dollar, well, how do we do that? We stop Americans from selling dollars. We force them to keep their dollars. So you want to move your money, into these foreign assets before they do that. Because when they do, it'll be extremely expensive, which is one of the other reasons that I don't try to time the markets, is I just think it's so important that people be prepared in advance, because you just never know when the bottom is going to drop out of the dollar. And you don't know when the government's going to impose some kind of rules or regulations that make moving more money out of the dollar close to impossible or illegal. No, the other things that I think the government is going to do is attempt to control prices, because prices, I think, are going to start to spiral out of control. Right now, it hasn't happened yet. How is it that we're able to create all this inflation and prices aren't really rising? Well, you have to look at what the temporary factors are, right? What's been keeping prices from rising? Well, you had a lot of businesses that had too much inventory. A lot of stores had too much inventory. They're getting rid of it. They're discounting it to get rid of it. But once it's gone, well, it's gone. They can't sell it anymore. Now, whatever they've got left, they can raise their prices. People are cutting back on capacity. And as that capacity comes off, prices are going to go up. Also, the dollar. I said initially you got a bounce in the dollar. Well, that helped us out. But ultimately, as the dollar falls, prices are going to rise. So you've got these temporary factors. You've got inventory liquidation, and you've got a strong dollar that kept a lid on prices, despite the fact that the government is creating inflation. Now, if the government didn't create any inflation, prices probably would have dropped even more. And it's amazing the way the government tries to convince us that falling prices are somehow a bad thing. I mean, falling prices are a good thing, especially if you're a consumer, because everybody wants to buy something cheap. I mean, we're complaining now about the fact that healthcare costs are rising or education costs. Wouldn't it be better if these things were falling in price? According to the government, no. Prices going up are better than prices going down. We need prices to come down. That's how our standards of living grow. I mean, that's how, that's why I bought that plasma TV, because the price came down. If the price had kept going up, probably nobody would own one. But the fact is the prices were coming down. But ultimately, prices are going to rise, because the inflationary forces are going to overpower the temporary forces that are keeping prices in line. And when they really start to go up, the government is probably going to try to fight the inflation, the way Richard Nixon did with price controls. And you would think, well, they didn't work in the 1970s, so why would they do it? Well, I mean, the government always repeats their mistakes. I mean, they're repeating the mistakes of the 1930s. Why wouldn't they repeat the mistakes of the 1970s? Prices are going up. Well, it must be because of greedy businessmen. It must be because of greedy labor unions or speculators or those mean OPEC nations or foreigners or the Chinese or whatever. But the solution is not going to be to stop printing money. No, we need to do that. The solution is going to be, let's fix prices. Well, what happens when the government fixes prices? Well, you get shortages. Yeah, I mean, the government can't, force prices down. So what they do is they create shortages. And then if you want to buy something, you have to wait in line. Maybe you have to wait in a 2-hour or 3-hour line or 4-hour line to buy something. Because that's how, that's how things are rationed in a price-controlled environment. They're not rationed in a market environment. That's why we had gas lines in the 1970s. It wasn't because of the embargo. It was because of price controls. If the government had let prices go up, there would have been no gas lines. The price of gasoline would have been higher, but you wouldn't have had to wait in line to buy it. It just would have showed up. But it was because they tried to keep the prices low that there wasn't enough gasoline, because there was more demand than there was supply. So the only way to ration it was through long lines or odd and even days. So the same thing is going to happen. When they start to control prices, we're going to have shortages. And then what are we going to get when we have shortages? Where are you going to get black markets? People who aren't going to want to wait in line for 2 or 3 hours to buy something will buy it illegally. And now of course, what? Now you're exposing yourself to criminal penalties. And what is the transactions? People were joking in the back, I'm selling my books. I'm still accepting paper dollars, but at some point, people might not accept those. So what are they going to be dealing with in the black market? Will they be taking euros? Will they be taking silver coins? I don't know. But there's a good chance they won't take dollars, and that'll probably be illegal. The government might pass a law saying it's illegal to accept payment in something other than U.S. dollars, because they have to try to force us to use that currency. And of course, the more this happens, it's just going to spiral out of control. So people have to be prepared now. Prepare, financially, and don't buy into this idea that the crisis is over, right? That everything is going to get better now because of the stimulus, because of the bailouts, because we know that all they've done is compounded the problems, right? And pushed them off. Also, I wanted to talk a little bit. How many people in the audience here are clients?